What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today, we're talking about one of the most famous signals in the stock market, the golden cross. If you spent any time around investors, you've probably heard people say, the stock just had a golden cross. But what does that actually mean? And more importantly, why do investors care? Think about driving down the road. You're not just concerned with how fast you're going, you also want to know whether the road ahead is going uphill or downhill. That's exactly what moving averages help investors do. They help us understand the direction of the road. A moving average is simply the average stock price over a specific period of time. The two most common moving averages used by investors are the 50-day simple moving average and the 200-day simple moving average. The 50-day moving average represents the stock's shorter-term trend, while the 200-day moving average represents the longer-term trend. On this chart, the gold line is our 50-day moving average and the white line is our 200-day moving average. Notice how the gold line eventually crosses above the white line. That moment is called the golden cross. So why is this important? Because the golden cross tells us that recent price action is becoming stronger than long-term price action. In simple terms, the road is starting to slope upward. Buyers are becoming more aggressive, momentum is building, and investors are beginning to believe higher prices may be ahead. And for today's example, we're looking at Nvidia, one of the most popular stocks in the world. Right around the time this golden cross appeared, Nvidia was trading in the upper 170s to low 180s. At the time, nobody knew exactly what would happen next. That's important because indicators don't predict the future. They simply help us identify probabilities. But look what happened after the crossover. Nvidia exploded higher, eventually pushing above $230 per share. That's a move of more than 25% from the crossover area. Now put yourself in the shoes of an investor looking at this chart in real time. You wouldn't have known Nvidia was about to make that move. There was no headline saying, "Hey, buy right now." All you had was information. The 50-day moving average was rising. The golden cross had formed, and the stock was making higher highs and higher lows. That's why investors love trend-following indicators. They don't need to predict the future perfectly. They simply help identify when the odds may be shifting in their favor. Now, before you run out and buy every golden cross you see, there's something important you need to understand. The golden cross is what traders call a lagging indicator. That means it confirms a trend that's already beginning rather than predicting one before it starts. In other words, the stock had already shown some strength before the crossover occurred. The golden cross simply gave investors additional confidence that the trend was becoming stronger. And this is where good investors separate themselves from lucky investors. A golden cross by itself is useful. A golden cross combined with other indicators is powerful. Remember our previous video about the trifecta of indicators? The strongest setups happen when multiple indicators tell the same story. Looking at Nvidia, we can see more than just a golden cross. We can also look at MACD. Around the crossover area, momentum was improving. We can look at volume and see investor participation supporting the move. We can look at RSI and see strength building within the stock. When multiple indicators align, the odds improve. Here's the mistake most beginners make. They think every golden cross means buy and every crossover automatically leads to massive gains. That's simply not true. Sometimes golden crosses fail. Markets change. News happens. That's why indicators should never be used as guarantees. They're tools, not crystal balls. Instead of asking, did a golden cross happen? A better question is, what else is supporting the move? Is volume increasing? Is MACD bullish? Is RSI showing healthy strength? Is the company fundamentally strong? The more boxes you can check, the better your odds become. So here's the takeaway. A golden cross occurs when the 50-day moving average crosses above the 200-day moving average. It signals improving momentum, strengthening trends, and growing investor confidence. It doesn't guarantee success, but it can help investors identify opportunities where the road ahead may be sloping upward. And when you combine it with volume, MACD, RSI, and solid fundamentals, it becomes an even more powerful tool in your investing toolbox. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. Don't forget to smash that like button, subscribe, and drop a comment with a stock or indicator you'd like me to cover next. This is Sat, and I'll catch you all in the next one. Peace.